Hi, my name is Brenda Boetel. I am the University of Wisconsin Extension System Commodity Marketing Specialist and a professor of agricultural economics at the University of Wisconsin River Falls. I'm going to talk to you today about the livestock market outlook. The key points of what we're going to talk about are just basically what is the situation and outlook of what's happened in livestock. 2020 threw a lot of curveballs to the protein industry, and I'm going to talk briefly about some of the impacts and then spend a couple minutes each on what's going to happen to feedstuff, poultry, pork, and beef production. The beginning of the second quarter of 2020 saw significant market issues for poultry, pork, and beef industries as the processing plants shut down due to the coronavirus pandemic. At the beginning of 2020, there was a large number of cattle that were set to be harvested in the first and the second quarters. As the processing plants were shut down, cattle feeders were forced to feed longer. And that meant that stockers and vet grounding operations and even some cow-calf producers were forced to carry cattle longer outside of the feed yards. Meat packing plants closed right when the beef packing industry was gearing up to seasonally increase slaughter due to the number of market-ready animals and also in preparation for the summer grilling season. The inability to market cattle then can be seen in the left graph with the large drop in cattle slaughter in April and May. Couple this decrease in slaughter with the seasonal demand for retail beef products, which was then exacerbated due to the government gathering restrictions in restaurants. Those two combined to cause wholesale beef prices to rise to historic levels. The beef jump can be seen in the right-hand graph, which depicts the choice cutout value. The hog industry had a similar but worse scenario. They were already close to packing capacity when the processing plant shut down, and the closures meant hogs had nowhere to go. The system couldn't work through the backlog of market hogs fast enough, and a large number of hogs ended up having to be euthanized. The processing shutdowns are still having effects in the hog and the cattle industries. On the cattle side, the large number of 2020 placements that were delayed due to feed yards being full because they couldn't market cattle meant extremely large fall placements in quarter 3 of 2020. These placements will be harvested then in Q1 and Q2 of 2021. The smaller calf crops in 2018 to 2020 then are finally going to have their impact on the beef production in the latter half of 2021 as the impacts of the shutdown in the quarter 2 of 2020 is finally going to have been worked through the system. When we look at feedstuff and prices for particularly corn for the 2021 year, I'm not going to spend a lot of time talking about that because there is another outlook that you can preview for that. But what we do know first off is that prices are going to be high. Prices are already above the projected USDA annual average for the 2021 marketing year, and there's not a lot of potential for them to go down. The stocks to use is extremely tight. In the January report, the USDA revised their yields per bushel downward, and that sent the market for the prices for corn skyrocketing. The USDA in that report also revised their demand downward as they're expecting some rationing. Whether we see that or not will be determined yet later this spring. Prices either way are going to adjust seasonally. We should expect some support for these high prices if they go down a little bit, but there's very limited downside potential for corn prices. When we look at next year or later, the acreage for 2021 is likely going to be no more than 92 million acres, which is up only slightly over what we saw in 2020. The reason for this is that the soybean to corn price ratio is heavily favoring soybeans at this time. So even with some minimal decreases, if we don't get much more acreage, there's very limited potential for corn prices to decline. When we look at poultry production, poultry suffered similar processing issues as pork and beef, but the short production cycle that we see in poultry meant that the impacts cleared much faster. The poultry industry was able to respond quickly to those slaughter constraints and the loss of the food service demand. The industry avoided any excessive backlogs then. Poultry production was up 1.4% in 2020 and will reach a new all-time high in 2021. This will be the 9th consecutive year for the all-time highs. In 2021, profitability will remain tighter due to higher feed costs and limits to the restaurant business. However, optimism for continued export growth and a return to pre-COVID domestic food service demand should support about a 1% growth in 2021 broiler production. Exports are forecast at 3% larger for broilers. Turkey production is down about 1.8% year over year, and 2021 production will be stable with 2020 production. 2020 turkey prices peaked in October at 115.74 cents per pound and have since declined. 2021 will see slightly lower average annual price with an expectation of $1.06 per pound. The pork industry entered 2020 in the expansion mode. This time last year, every analyst was focusing on African swine fever and the resulting global protein need. This made the spring plant disruptions especially painful. Although the backlog has been mostly eliminated in the hog industry, seasonally larger hog supplies challenged packing capacities in the fourth quarter of 2020. The Hogs and Pigs report suggests reduced farrowings and increased culling during the pandemic, which will be realized then in the production in 2021. The forecast for 2021 pork production is 1.4% lower. Through the first 11 months of 2020, U.S. pork exports totaled 6.6 billion pounds, or up 1 billion pounds, or 17.8% from the same period in 2019. Pork export shipments were expected to end 2020 at a record 7.3 billion pounds, up being 15.7% relative to 2019. African swine fever helped favor the large growth in exports and is going to continue to support another 6% growth in 2021. U.S. exports will be limited due to the decline in pork production that is expected in 2021. The strong exports and the declining production is going to give a decrease in net per capita supplies in 2021, resulting in the tightest domestic pork supplies since 2014. Unless exports or domestic demand disappoint in a big way, hog and pork values should increase year over year for the first 3 quarters of 2021. Only in the fourth quarter will producers see year over year declines in hog prices. After all of 2020's curveballs, total beef production in 2020 is almost the same amount as in 2019. It will likely set a new record for beef production at about 27.2 billion pounds. Steer and heifer slaughter ended only 2.7% behind 2019, and carcass weights were up. Steer dressed weights averaged 906 pounds through November compared to 876 pounds in 2019. Total cow slaughter was 1.5% below 2019. Beef cow slaughter was up in 2020, while dairy cow slaughter was down. Low calf prices and drought conditions are acting to increase beef cow slaughter. Beef production will be down slightly year over year in quarter 1 of 2021, although the decline is not as much as expected due to large placements of feeder cattle in quarter 3 2020. Beef production will increase in quarter 2, but this is again due to the extremely low production due to shutdowns in quarter 2 of 2020 and the large placements in the fall of 2020. The second half of 2021 will see the shutdown issues having finally been worked through the system. Without these shutdown backlogs, the decline in the cow herd will be noticeable in the latter half of 2021 and finally seeing decreases in beef production. Due to the inability to process and the high wholesale prices, 2020 saw beef exports decline by about 40% in May and June compared to the 10-year average. During the same time period, beef imports increased in order to be able to meet the U.S. demand. The beef market was eventually able to sort through the supply and demand issues, and subsequently export sales normalized. By the end of 2020, beef export commitments were the largest ever, and the actual exports for the year were the second largest behind 2018. We should expect continued export opportunities for U.S. producers in 2021, with the potential to increase beef exports up to 5% over the 2020 levels. The positive contribution to beef exports was China and other trade agreements. Since the Phase 1 trade deal with the United States, beef exports to China have increased each month. In October 2020, China received 20 million pounds of U.S. beef, making it the sixth largest destination. In 2019, U.S. beef shipments averaged only 3 million pounds per month. Additional trade agreements that have been beneficial include the U.S.-Japan and the U.S.-Korea trade agreements. Japan and Korea are the largest trading partners for the United States, and the agreements have made the U.S. beef much more price competitive. So where are we headed for 2021? As we saw, in 2020, we had larger production of protein. The record protein production in 2020 was about 106.5 billion pounds. We will see stable production then in 2021 because of the increase in production in the poultry industry and the declines that we're going to see in the pork and the beef industries. From the side for 2021, what are some issues that we want to consider still? ASF, or African swine fever, is going to continue to support those pork exports. Because of that strength in that pork exports and the decline that we will see in production, we're going to see tight pork supplies, which is going to lead to or give support for higher prices. COVID is going to continue to challenge then in 2021. This is particularly true for the beef industry because the beef industry gets a lot of value from food service. And until we get back to where we have normal production or normal food service where people can go to restaurants, this is going to continue to challenge the beef industry. What will cattle profitability be in 2021? Depends on the segment of the industry that you're in. If you're cow-calf, we already know that there are declining numbers as the herd size has been declining, which gives support for higher calf prices under normal situations. Those declining numbers should continue to allow calf prices to increase. One concern that we have for this segment of the industry right now, though, is drought. We're starting to see a lot of drought in the south and the southwest. That's going to make forages tight. And with high grain prices in that, we may end up seeing a larger amount of cullings in the beef cow industry than what's expected. On the stocker side, the 2020 calf crop was down about 250,000 head. Although what we will see in the January report, or the report that shows us the number of cattle on feed outside of feed yards on January 1st, we're going to see that that number is basically unchanged relative to what it was on January 1st of 2020. The reason for this is, again, because of the backlog due to the Packer shutdown in 2020. Eventually, we're going to work through that system. We're going to work through that backlog. And those prices are going to be stabilized and increase. From a feed yard perspective, 2021 is still going to be a bit of a challenge, especially the first half. We're going to see higher grain prices, higher feed prices. And in the first half of 2021, we still have a large number of cattle that we have to be able to process. Due to that, we're going to see very low and very tight to negative margins in the first half of 2021. By summer, we should see more manageable slaughter. And so even with those higher feeder cattle prices and feed prices, if we do some management process, there is some potential for the latter half of 2021 to see better margins because of those higher fat cattle prices.
Although I didn't go over any specific price projections for poultry, pork, or beef for 2021, we can entertain those or any other questions you have during the live portion of the Wisconsin Ag Outlook. I look forward to hearing from you then.